Hello, good afternoon, everybody. Welcome to the day 30 of our 60-day trading challenge, and we are now halfway through our this challenge. That's we completed the 30 days today. It's a remarkable journey, I would say. So I'm enjoying. So I hope a lot of learning for the people who are following this challenge. Today was a very difficult day with the yesterday night's geopolitical tension which got created, which was already getting reflected in yesterday afternoon's VIX going up. So we will just look at the chart of the VIX also. It was already showing the volatility getting factored in, or it started going up in the second half of yesterday's trading day. And as anticipated today also, it was in the morning, it is shooted up. So in a normal given situation, we would not have taken the trade at all today, particularly on event days and the days with such kind of a high volatility, we would have avoided taking the trade. But however, since we are very much committed to ensure that we have a continuity of this 60-day trading challenge without any break, we indeed took the trade. But however, we waited for the VIX to bit settle down, and around 10:15 or so, VIX started cooling off a bit, and then that is when we started monitoring the market. And we our post 10:15. Our setup got formed only at 10:45, and it was a bullish bias trade. So obviously, we sold the put accordingly. So we'll just get into the details through the charts. Let me share the screen, and then we'll do the analysis of the day. So I'll just start with the VIX chart here. So VIX started, this is the yesterday, say around 2 p.m. or so. It started shooting up. Abnormally, it started going up. It ended at almost at the end of, high of the day yesterday. And today morning also, as anticipated, it started shooting up. And at around 10 o'clock, so yeah, 9:55, 10 o'clock or so, 9:55 p.m. or sorry, a.m. or 10 o'clock, it reached a peak. And this, increasing VIX, we were not sure whether further it will go up or what would be the scenario. So we waited in such scenarios to avoid the high volatility. We indeed wait for the trade setup for the VIX to cool down a bit. And then here it started cooling down. And then we started monitoring around 10:15. Since it started flattening over here, we started monitoring the, our trade setup, but our trade setup only got confirmed at 10:45 and around at the close of this candle. And as you see, the VIX had by then cooled down a bit as compared to the how it has gone up. And we entered the trade at 10:45 a.m. We sold the 24,200 put. And one difference today is today being the one day prior to the expiry, we normally would have preferred to sell the next week put, because we would not have got the reasonably good premiums for a delta of around zero point 0.3 or so. We would not have got a reasonable premium. But today the premiums were relatively high, and hence, as per the strategy setup, we took this week's put option itself to sell, and we could sell it at 37.35. And as you see here, and we ended the day. It's almost we were to exit the trade at the day end at 3:15, but just before that, 2 minutes before that, the trade triggered the trailing stop loss. That is our time-based trailing stop loss. So the trade ended based on because of the trailing stop loss. It exited just 2 minutes before the scheduled exit thing. So I'll just show you the put premium chart. And this is our entry candle. And then it started going in our favor for most part of the day, like, except for the for first 5-10 minutes, it was against us. But the remaining part of the day, it was till say 2 o'clock or so, the trade was in our favorable direction. And as you see in the index movement post 2 p.m., the market again started, or rather post 2 o'clock exactly. This is the candle. It closed at 2 o'clock. So after that, you see the market started kind of slightly moving upward, and accordingly, this was getting. And also the VIX started going up again after 2 o'clock, as you see here. The combination effect was the our premium also started going up. But whatever the decay had happened till then, it got eroded. Rather, it wiped off those decay, and then again it came back to the positions where almost which we had sold. But our trailing stop loss. In such cases, by post 2 p.m., we will keep it at the cost level, and that is how we exited at the cost level, recovering the trading cost and ending the day in a minor nominal profits. That is what we. This is the candle, as you see, is where we exited. And okay, post that again, it fell. That is a different issue. But anyway, it doesn't matter to us what happens after we exit. But we exited over here. That is at 315. So the market, as you see here, the day started very in a wild movement. This is a Nifty chart which I'm referring to. You see the length of the candles which were getting formed in the initial period of the when the market started off. It went up, it came down, and again it went up, and then it started settling down, and that is when we could enter the trade. So it is very important that the strategy should have criteria that will define when to delay the trade and also when to exit and those criteria. And I believe our strategy is got very robust, such criteria, and that is how we were able to survive in such high volatile day today. So just to share the trading journal, we sold the 24,200 put at 37.35, and this is one of the lowest premium I think we would have sold throughout this challenge. Yes, today is the lowest premium, because generally we would prefer to sell anything in excess of 45, 50 rupees kind of a things. But considering the volatility and the situation, we chose to stick to a low risk trade today, and we ended the day at premium which got sold at 35.65, 35.65. We incurred a trading cost of 52.6. So at 74.90, that is about around 35 rupees is the overall profit which we made. And the one another observation is we this is one of the the 4 days in a row winning streak is one of the highest so far. In one occasion earlier, we had experienced the 4 wins at a stretch, and this is the second such occasion. Otherwise, 3 wins in a streak was we have been experiencing multiple times, which also means tomorrow we need to be a bit watchful from the statistical standpoint of view. Like 4 winning streaks is kind of a limit it has got so far in the 30 days. The fifth winning streak can be, possible. I'm not saying that it is not a possibility, but we don't care about it. But I'm just bringing that observation as well. So going to the equity curve here, today with a very nominal green territory, we closing the day with a green territory. Our equity curve remains on a peak level. So as you see here, 12.14% is the profit at which we are sitting after 30 days. So if somebody has got a kind of a expectation, oh, in 30 days it is earned 12.14%, and will it earn double this P&L after the 60 days? Definitely no, because we know the behavior of our strategy. We Our expectation is not more than 2 to 3% in a month. That means 3 months it is the thing. So our expectation will be happy if we are able to end with a 6% return. But again, P&L is not at all the focus. Let it reward or punish us the way it wishes to. As long as we stick to the rules, we will be very happy that and we'll know that it gives us the positive outcome. So, without stressing too much on the profit or loss, we are glad that even in this situation where the not so very conducive geopolitical conditions were there, we were able to sail through the day in a comfortable manner. And that's all for now. See you tomorrow for the 31st day of the this trading channel. And thanks for joining and supporting us. And then have a great day. Bye bye. Take care.